Hello and welcome to Startup Street. I'm Arundhati Ramnan and these are the top headlines from the startup world. Recruitment firms linked to BharatPay co-founder Ashnew Grover and his family members used backdated invoices to siphon off funds. That's as per the Economic Offences Wing's preliminary investigation report accessed by Money Control. Razorpay's plans to move its parent company to India may entail a tax bill of $250 to $300 million in the US, where the digital payments unicorn is currently domiciled, according to reports. Oyo is set to prepay a large chunk of its debt amounting to 1,600 crore rupees through a buyback process. The travel tech unicorn is planning to buy back 30% of its outstanding Term Loan B instrument. Keychain raises $18 million in a seed funding round led by Lightspeed and others. Second startup by Oisin Hanran Umang Dua, the founders of home services marketplace Handy. New venture, Keychain aims to play matchmaker between consumer brands and manufacturers. Google CEO Sundar Pichai returned to court to defend internet company for the second time in 2 weeks. Reveals Google is shelling out billions to be the default search engine on Apple. Experts say revelation is in line with the Justice Department's antitrust claims. OpenAI pauses new sign-ups for ChatGPT Plus due to overwhelming demand following its Developer Day conference. OpenAI CEO Sam Altman in a tweet said the surge in usage exceeded capacity, which led to a major outage. Those were the headlines that we're tracking for you this evening, but electric vehicle company Euler Motors raised 120 crore rupees in its ongoing Series C round. The funds were raised from British International Investment, the UK government's development finance institution, and Green Frontier Capital. Now, existing investors like Athira Venture Partners, ADB Ventures, Bloom Ventures, Ulterior Capital, and others also participated in the round. With this, the company has raised a total of 690 crore rupees to date. Joining us now to discuss the fundraising plan is Saurav Kumar, the founder and CEO of Euler Motors. Saurav, thank you so much for joining us on Startup Street today. Like I said, you've raised 120 crore rupees in your ongoing Series C extension round. How much more are you looking to raise? And talk to us about how you plan to spend these funds.
Hi, thanks Arundhati for having me on the show. Electric vehicle OEMs are a bit capital-intensive place, so you need to raise capital to sort of scale manufacturing, scale distribution, and bring interesting product to the consumers. So far, I think our focus has been on the product development and getting the manufacturing right. Last year, we have focused now on scaling the sales part of the business. And we think that over the next 1 or 2 years, we might continue to raise capital. And sooner or later, I think we'll only need capital to grow, I would say, sustainably. I think that would be our sense. I don't think we are going to be just raising capital for chasing growth, but mostly toward sustainable growth.
Okay, so you're chasing sustainable growth there. You know, some of the targets that you mentioned is to be in like 40 cities by the end of this year. Also, scaling up production is huge for you. So talk to us about where you're at now and how much production will you scale your production by? How many cars do you hope to make a month?
Yeah, so let me give you a bit of context. So almost 5 quarters back, if you look at Q2 of 23, we did roughly 125 vehicles in that quarter. Today, almost 5 quarters later, we are doing close to 800 vehicles. So we have ramped almost, I would say, 7x over the last 5 quarters. And I think our intent is to get to another 2x in the next 2 quarters. So we will be doing almost, I would say, 14x over the last 1.5 years. So that, I would say, has been a phenomenal growth for us in terms of production, in terms of sales. Obviously, we are going to deploy these capital not just toward production, but also making sure that services on ground is maintained in the similar fashion as it has been in the early years when we were doing, let's just say, 100 vehicles in a quarter. In production, we are right now at a point where we are manufacturing 800 to 1,000 vehicles in a quarter. And I think we'll get it to around 1,500 to 2,000 over the next within 6 months.
So 1,500 to 2,000 vehicles in the next 6 months. Now, let's look at the numbers then. In FY22, your gross revenues grew to 17.6 crore rupees, but your losses also jumped nearly 90%. So talk to us about where your revenues are at currently and how do you plan to bring down your losses? What's the target here?
Yes, certainly. So if you look at our FY20, just to add to that, FY23, our revenue was almost like 59.9 crore, and we did on an EBITDA level, our losses were around 125 crore. But if you look at this year, our target is to get to almost 190 to 200 crores of revenue. So almost taking like 3.5 x of jump in revenue, and our EBITDA would be almost slightly similar, maybe around 130 to 135 crore. So we are going from 125 crore of EBITDA burn last year to almost 135 crores of to 140 max this year. But our revenue would have grown like 3.5x. I think next year should be something similar, but revenue growth again would be like at least 2x to 3x. But after that year is when we think that our EBITDA burn will reduce significantly, because as you're scaling in automotive, you have to get to a certain kind of scale to hit a particular gross margin, and then that scale kind of takes care of your general admin and some of the other costs of the business. Because the production and your sales are the things that are kind of growing with your as your production and sales are happening, but your general admin and people cost tend to non-linearly sort of grow. So that's something sub-non-linear. So that's something we think that over the next 1 year, we should be doing similar EBITDA burn, but the year after it will reduce significantly for us.
All right. So the year after, you'll see a lot of that EBITDA burn go away. So give us a sense of the kind of demand that you've seen for your flagship product, the high-load EV, and how many more do you hope to sell this fiscal, and what sort of an impact have you created through this?
See, so I think it's almost in 2 years. I mean, 26th October, we launched. It's almost 2 years. We have sold close to 3,000 vehicles. I mean, until last month, we were selling in around 16 to 17 cities. And in those cities, we are almost I would say number 1 or max number 2 player. So we have been, wherever Euler has been going, we've been taking the market. I mean, obviously, each cities might have its own ups and downs in number leadership position, but overall, we have been leading the chart. If you look at Pan India as well, our market share in the 3-wheeler cargo space, I mean, a year or 5 quarters back would be around 3 to 4%. Today it should be around 12 to 15%. So we've been growing phenomenally. I think the reception for our product is amazing. I mean, what Euler has been able to bring to the market is the right value and price impact for the customer. Like our customers can deliver almost 50% more payload in our vehicle. I mean, 700, it's one of the highest payload carrying capacity vehicle in the segment ever created. It's not just in electric. I mean, with respect to diesel, CNG, petrol, any 3-wheeler, it's one of the best that is there. What we are focusing right now in how do we make sure that as we are expanding to tier 2, tier 3 cities of India, how do we still manage the same kind of service? Like in this festive month alone, we have sold more than hundreds of vehicles in tier 1 cities like Delhi. But being able to service in Delhi, which has been our home ground over the last couple of years, we've been able to do that phenomenally well. But how do you scale that when you go to 40 cities? I think that's where we've been thinking, and we want to maintain the same kind of SLA. And I think if we can do that, what we've been able to show that even if we are a new brand, people are willing to take bet, even if the products are like almost at 4 to 5 days.
Right. So big expansion plans there with your flagship product. But we're completely out of time. So thank you so much for joining us on the show today. And we wish you all the best going forward.
Thank you. Thank you so much, Ranjiti, for having me on the show. Thank you.
And Ritu, it is over to you with that.
Hello and welcome to this special segment we're bringing to you from Nasscom's annual event here in Bengaluru called Nasscom Future Forge, earlier known as the Nasscom Product Conclave. Now it is in its 20th year. Every year it brings together leaders in industry from various fields of technology to showcase the latest cutting-edge technology and how it's reshaping the ecosystem. This time around, the theme is accelerating deep tech product growth. Joining me now to talk about the state of the deep tech industry, its potential, and the future growth trajectory are some of the prominent voices from the industry. And of course, we have from Nasscom, Sangeeta Gupta, Senior Vice President, Chief Strategy Officer at Nasscom, Akash Sinha, Founder and CEO at Omnipresent Robot Tech, and we have Jayasimha Rao, the Founder and CEO at Nico Robotics. Gentlemen and Sangeeta, thank you very much for your time here. Sangeeta, if you could start by setting the context for us, especially now that you're at this event. You've been speaking to a whole lot of people, I'm sure. What is the state of the deep tech industry in India? We've been talking about it becoming this big thing for India. But whether it is the investments, whether it is the size of the opportunity, some numbers for us.
Sure. And thank you so much for doing this. So if you look at the Indian tech startup ecosystem, right, India has about 27,000, 28,000 technology startups in India. And then we started looking at saying, so how many of them are focused on deep technology areas? I think surprisingly, the number was only 10, 11%, right? So India has about 3,100 deep tech startups in India. A lot of focus on AI and IoT and cloud and somewhat in the emerging areas of quantum, etc., but still very, very early in its nascent days. Almost a repeat back to 10 years back when Nasscom started the whole startup initiative, and we said we need to grow this ecosystem. So I think we're at a similar moment now where you're poised for growth, but you need that deep acceleration to really take the deep dive. If you see funding, right, I think it's 2.7 billion in the last year. Okay. I know there is a funding winter, but the numbers are still much lower than what you need. Also, I think if you just see the imperatives, what deep tech startups need in India, right? You need access to patient capital, and my co-panelists will talk a lot more about that. Yeah. You need access to the right talent. The world of technology is changing so fast, right? I mean, just everything that's happening around AI, there is so much change and shift taking place. I think we need an ecosystem that comes together, that builds all of these different pieces.
Okay, speaking of the ecosystem coming together, Jayasimha, let me ask you about Nico Robotics and what you're doing with helping farmers with these robots that spray pesticides, etc., exactly at the same spot that's needed. Tell us a bit about how you're using technology and the size of the opportunity you see in the agri-tech sector, because that's a humongous space, and yet the penetration of technology in agriculture for a country like India remains abysmally low.
Yeah, I think just to give you a sense of how big Indian ag is, it's 130 million hectares. So if you rank us, we are number 1 or number 2. We are the number 1 tractor market in the world. So the myth that Indian farmers don't adopt machines or technology, I really want to bust that myth. If farmers don't see value, then why are we selling 1 million tractors? The answer is it's providing immediate ROI. So where we see our technology scale up in India is we're focused on the sprayer space. For every 130 million hectares, you are spraying each acre at least 3 or 4 times in a season. Why are we blanket spraying the entire field? The analogy that I like to draw is if you're a teacher, you have 30 kids in your class, 3 of your kids are sick. You're not going to give your entire class antibiotics. But that's exactly what we're doing in agriculture today. Irrespective of the health of the plant,
precision farming.
We spray everything. Yeah. How do we move farming from a broad-based acre level to a precise plant level? I think that's what we're trying to do. And
what would you spell as the size of the opportunity? Something that Sangeeta was saying is pretty...
Yeah, I mean, if you look at the entire pesticide market, it's probably a $10, $15 billion number in India. And we feel like that number should be way low. You shouldn't be using so much pesticide. And with our technology, you can spray, half of that, hopefully.
Akash, you've quite literally been in the sky. You've been working with ISRO in their lunar missions with Chandrayaan. Tell us how this collaboration between private players like yourself and the government is working out, and what more would you like to see in terms of policies with what InSpace is doing, for instance? They're doling out EOIs, etc. Are you participating? What is the opportunity you see in the space tech sector?
So, space tech can be divided into sort of 2-3 broad segments. So, one segment is remote sensing. So, if you look at remote sensing, globally, the predictions are that by 2032, global market for remote sensing is about $55 billion now. And obviously, a significant chunk would be in India. And then there is the other segment is the rocket propulsion. And the third segment is planetary robots. And so rocket propulsion again is going to be a very big market. I mean, if you look at with all the success of ISRO and the success of Chandrayaan, our total share in international rocket market is only 2%. And the big guys like NASA and Russia, and they have the biggest chunks in China. But this can change when India starts building bigger rockets. And this is where the new organizations like in space come into play, where they encourage public-private partnerships, and you're able to build these bigger rockets that will help us, grab a bigger chunk.
Yeah. Sangeeta, let me come back to you on the policy aspect of it. The National Deep Tech Startup Policy. Comments had been invited by September. Now it's in its final shape and form. What do you make of it as far as the hits and misses are concerned? What more would you have liked to see, or what do you think are some of the game changers that are part of this policy?
I think the good part is the government has finally created a policy, right? So there is the emphasis on deep tech that the government recognizes, and there is a policy. And deep tech, I think, like you're hearing from my co-panelists, is not a uniform whole, right? There is the IDX, which is a defense policy that's happening. Space is separate. So you're seeing a lot more sectoral policies also that are playing a space. The policy is comprehensive. It covers a lot of things, from funding to IP creation to collaboration, and a lot of different things. I think, to me, the most important ingredient is how do you get it to be implemented? Because it's not one department that has to do it. Yeah. It requires a lot of interministerial, state, center collaborations to make it happen.
And, Jessima, if I were to ask you as one of the industry players what you made of the policy, what more would you like to see in it?
I think it's a great first start. Akash and I have been in the doldrums of trying to build deep tech in India. Back in 2015, we used to speak to each other.
And I think we were from the same college.
Ah, I see.
Yeah, we went to the same college in the US. The joke I used to make is, if I had to pitch for money back in the day and there were 100 investors, I would say I'm an agri startup. 90 of the investors will leave, and there's still 10 remaining. And then we would say we are a hardware startup. Out of the 10, the remaining 8 will be, and we had only 2 kind of risk-taking kind of funds back in the day. But now, judging by the energy in the room in today's conclave, judging by the startups on display, I think 2023 is very different from 2015.
So if you were to pitch to investors now, out of 100, how many would stay?
I think at least 40 will stay. So
that's a massive improvement from 10.
Yeah, massive.
Akash, do you think investors are more conscious of the fact that you require patient capital? This is not going to be a instant return for them, and how easy or hard is it to go out there and get funding?
So yeah, I would say capital always seems to be impatient, at least in India. But having said that, I think looking at some of the models that have worked in US, where people have invested and developed a product for 4 or 5 years, and then bring it to market, I think that sort of perception is now again coming back to India. And at least there are some investors who've started appreciating that if you want to hit some of the big technology breakthroughs, you will need to wait 3, 4, 5 years, and then once the breakthrough comes, then the returns could be also proportionately bigger. So I think that has started happening. I mean, and just coming back to policy part, one of the great things that I've seen in policy, at least in some of the other ones, for example, startup policy gives you a tax holiday for 3 years for, I think, first 10 years. And then the space tech policy gives you a holiday on GST as well. And similarly, a couple other things could be given to startups.
But what would you say, apart from funding, are the key challenges? Is getting specialized talent still the big challenge in a country like India? Or, IP-related norms? Or, what would you say are the biggest challenges for the deep tech space today?
Yeah, so I'll give you an example like this. So, for example, after we built this software for Chandrayaan rover, we've had queries from European Union, from Italian Space Agency, from Australian Space Agency. Now they're coming back to us and asking, how were you able to do it? And can you build this for us? Now the challenge for us is, if we want to scale up here, we need trained people in that segment, which is definitely not there. So we end up training most of our people. So on one hand, you might complain, oh, there are not enough jobs. But I would say in deep tech, there are more and more jobs coming. We don't have enough good people. And we spend 5-6 months just training them so that they can start contributing.
Let me just close this funding topic before we move on. Jayasima, your last fundraise was 2021.
Yes.
What next? Are you in the market for more?
Yes, absolutely. I think deep tech startups like myself, we always have to plan 4 or 5 years in advance. So I think we have our 2024 goals set.
How much are you looking to raise?
We are looking to raise about $10 million.
Okay, and what about you, Akash?
We're looking to raise $5 million.
But Sangeeta, for India to be really a leader in deep tech, we've spoken about the space tech, deep tech space startup policy that's come about. But what are the conversations with the government you as an industry body are having that sort of give you optimism, whether it is skilling the workforce, whether it is ensuring there's a diversified pool of capital and not just chasing perhaps the private equity players who have higher expectations of returns and so on? What are your conversations with the government like?
Yeah. So I think the focus for the conversations with the government, one is the policy side and how do you get that implemented, but two is the government has a number of funds, right? Every department has a fund, state governments have funds. How can we channelize a larger proportion of these funds to deep tech, right? Today, they're probably all over the place. Is there a way, if India's vision is to be a leader in the deep tech space, how can a greater proportion of these funds be leveraged towards deep tech? So that's one. Two is in talent, we're already doing a lot of work, and I fully agree with the point that while there's a lot of talk about no jobs, there's so many job openings in the deep tech space that are still unfulfilled, right? And the last is data. India is sitting on so much data, right? How can that data be available, deduplicated without any personal identifiable information for startups to leverage and build out the next gen models? So yeah, I mean, these are a lot of conversations that are underway and we hope to see them materialize.
We'll see how that goes. But before we let you go, Jayasima, let me ask you, the year's been good for you. I think you've said that you're looking to target another hectare, another 1 lakh hectares, if I'm not wrong, coverage by the end of the year. Are you on track to do that? And what does 2024 look like?
We would have sprayed about 50,000 acres this halfway through. So we are on track to spray 1 lakh by the end of this.
And what would that mean in terms of your revenues and profitability?
We're looking at 2-3 crores of revenue.
And Akash, you've quite literally been in the sky this year. What's 2024 for you?
I think 2024 is looking good. We are expecting to close at around 12 to 14 crores this year.
All right. On that note, Sangeeta, Akash and Jayasima, thank you very much for sharing your thoughts. I hope the audience had something to take away. Thank you very much. A pleasure speaking to all of you. Thank you.
Well, thank you, Ritu, for that special conversation. Now, in a bid to create a responsible and self-governing infrastructure, over 35 Silicon Valley VC firms and 15-plus companies representing hundreds of billions in capital have signed the voluntary responsible AI commitments from Responsible Innovation Labs, a non-profit co-founded by Hemant Taneja of General Catalyst. Some of the firms include global investors such as Antler Global, Bain Capital VC, the Ford Foundation, investing giant General Atlantic, of course, General Catalyst, Ribbit Capital, SoftBank, among others. Now, these firms are committing to 1, responsible AI, including internal governance, 2, appropriate transparency and documentation, 3, risk and benefit forecasting, and 4, auditing and testing and feedback cycles. And finally, ongoing improvements. In addition to the commitments from Responsible Innovation Labs has published a how-to playbook to help investors and startups alike fulfill the commitments. And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.